Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. Welcome, Phil. Morning.
Morning, Mark. Morning, everyone.
Morning, everyone. Look, stocks slid overnight as the Iran truce expired. I don't think anyone's overly surprised about it. However, it is what it is in terms of the overall thing. And I'll just have to grab some. I'm just going to have to grab these extra slides here. But overall, we had the S&P slide about 0.5, and we had I think the Nasdaq's down about 0.3. 10 of the 11 S&P sectors were closed. And we're just going to, like I said, I'm just going to bring up the extra slides here. But overall, that 60-day MOU expired on Monday. Trump said there was no way that they were going to extend it. Basically that, he's also gone out and said if Oman got in the way, that he would bomb the shit out of them, I think were the exact words.
Exact words.
So, we've got a bit of a... it doesn't seem to be coming up here this morning, but anyway, we've really got a way. Overnight we've had that 30-year bond yields, the Treasury yields up 6 basis points to 5.31. That's another fresh high. The drivers are obviously these $2 trillion annual deficits, and really I think where we're at is, we've got those long end bond yields really struggling, to encourage people to invest.
Yep.
And that debate going on because I think there's been more money go towards, the hyperscalers in terms of the debt as well. So but realistically, we're I think Anthropic had their revenue run rate pushed up to 65 billion. That's 7 times what they expected at the end of last year. They were expecting about somewhere around the 10 billion mark. And overall, we really are in a situation where they're struggling for overall. For extra money, basically. So just as well, try and get these slides sorted. But it really is a bit of a divided camp there at the moment. And we'll get to the ASX earnings in a second while I get these up. But here we go. So there we go. ASX was down a little bit yesterday. JB Hi-Fi and things, which we'll get to in just a minute with Phil. You can see the software companies got hit a little bit, Microsoft and those Meta and things, and the memory chip stocks up a little as well, Lam Research and Applied Materials and things, and obviously the energy sector as well because crude was up a couple of percent. That's that Anthropic run. We were expecting around that. I think mid-December they said, maybe 10 billion annual run rate. Now we're at 65. So that's kind of proving the case for the. That's proving the case for the AI thematic. Kai and I are going to have a webinar on this next Tuesday at 12:30. You can go to mpcinvest.co/webinars and register there. The AI age, which we think that similar to sort of the internet age, different sort of roadmap, but and a much faster roadmap. But the LLMs and the GPU and the data centers, sort of that phase 1 and phase 2, and we're sort of into that enabling AI, moving a lot faster, as I said, than the internet age. But we'll get across. I'm releasing a live wire article this afternoon, which is basically around around the general thematic, and then you can watch the webinar next Tuesday, and then on demand after that as well. But yeah, so sorry, Phil. ASX earnings. These were a little bit incorrect. I think JB Hi-Fi was down 10, NAB was only down 5, and BlueScope was only down 2.2. I think that one's around about right. Anything really from yesterday that you sort of saw that stood out?
Look, basically JB Hi-Fi reinforces, the Australian consumers are doing tight. They're tightening their belt, and basically, previously we had Nick Scalia, Dares, and in Sympathy we had Harvey Norman and Super Retail down 6%.
Yeah, okay.
So, things are tight out there. It's no great surprise. BlueScope returned $1.3 billion to shareholders, which is 10% of the market cap since February. Lendlease posted a $749 million net loss versus a $225 million profit a year earlier.
Yep.
The SPY's pointing to an opening of down 40. So it's going to be a soft day. We've got as Mark said, we've got a lot of earnings coming out today, a couple of really important ones.
So we've got BHP. Look, just the headlines here at the moment. BHP announced its biggest dividend in quite some time, up 56% from last year's dividend, or 57%. US 172 a share for the entire year, driven by, as everyone guesses, copper. And Hub24 beat forecasts as funds grow by 20% as well. Downer, was awarded a contract. CSL has 5% profit growth in the outlook after net loss, but
that was pretty much consistent with the May update.
Well, it's pretty in line from what I can tell.
So no real surprises there.
And obviously, Judo as well. We had probably there was a lot of risk priced into Judo, and it was a bit of a shock. I still think they've got to earn back a bit of trust because it was a bit of a, they went and reassessed their book, and of all and then had a massive pivot within a quarter. Like, as a bank, you just can't do that. And I think whilst it's probably justifiable bounce in this stock today, I wouldn't say necessarily. I still think they've got maybe a couple of updates to go before they earn that trust back.
Yeah, it's going to take a while.
Because who knows whether they come out with another weirdly out of line update. So but their net profit jumped 29%. Their net interest margin was 20 basis points better. Their gross loans and advances were 14 billion, and really importantly, then what's driving that NIM is that 70% is now funded by deposits. So we're getting up towards CBA levels, which is pretty enviable. And and look, Challenger as well. You would expect them to do well with higher rates, being an annuity business and rates being a little bit higher. But whether that's out today, I don't necessarily know. An update for Pro Medicus as well will be, I suppose, will be watched by the market pretty heavily.
Just quickly, Mark. Sorry.
Yeah.
Look, I thought it was interesting. Brookfield has put in a $4.1 billion bid for Reliance Worldwide.
Yeah, right.
So there goes another Aussie company probably going off the stock market. And worldwide private equity firms realise we've got a lot of mid-cap. Stocks that are really value. There's good value there. And fund managers aren't touching them. They just can't. Well, there's no volume there. They just don't really want.
Well, all those you wrote something interesting on the markets chat here internally. Is that and I've mentioned it a number of times. Is you sort of have poor tax rules coming out from Labor. You've had a lazy monopoly going on with the ASX, which is changing, and I've been very critical of them in the past, but. There seems to be an effort for change. We are at least getting 3 decent IPOs this year, apparently. The Sharon AI and Firmus and things like that. And Glencore is going to come on here. So look, and don't get me wrong, we want a good market here in Australia. We don't we're not. You're not just throwing stones. We want it to be a good market here. That's why we're throwing stones, not just being critical for the sake of being critical.
And also, don't talk about the hyperscales and debt. Actually, Google repairs a $5 billion kangaroo bond as the AI arms race comes to Australia.
Yeah, right. So, I haven't really. Have you heard of? Has there been any other kangaroo bonds?
I don't think there has been in regard to the no.
Google has done a fair bit in Europe and stuff like that. Be interesting to see what the
and how that gets priced.
Well, exactly. I mean, because you're going to have to do fairly well to compete against term deposits and things like that. But but $5 billion, I would imagine, would get taken up pretty quickly. Be interesting to see if anything drops in our inbox. We're down the pecking order. Well, you're not. You're a very important man. But in terms of if it hits my inbox, it might mean that they're struggling to sell it a little bit.
They offer to us.
We're starting to wonder what's going on. But yeah, look, I mean, overall. look, I would start to think things like JB Hi-Fi will start to look attractive. I mean, it is a high quality retailer, and I would say just like those mining names 18 months ago, and possibly the healthcare names a year ago. You probably don't need to rush into it necessarily, but
maybe
like
60s, maybe.
Yeah, maybe, but I mean, but you probably just want to wait for it to stabilise and try to buy that quality for the next 2 years, instead of as it turns around. But and that's where we use the technicals quite well. Is in the past we haven't used the technicals particularly well because we've just bought on the fundamentals. But what we're increasingly realised over time is wait for it to stabilise, and even that study that we did leading into earnings season. I mean, realistically, you wait for it to stabilise and buy it out. They were the best opportunities last February, March. So we haven't had anywhere near as much volatility this earnings season. There was a lot of talk and an interesting article in the Fin Review about apparently the earnings reports, the CEOs and marketing people have adjusted to make them more readable from AI's standpoint. Well, because they've realised that a lot of this is automated trading, and once the horse is bolted and momentum hits something, that they're gone. So, but I mean, look, everyone will be pretty happy with BHP. Copper was fairly flat, although, I mean, these aren't massive ranges. As you can see, down 1% to up 2% is the scale here. So this looks like a big move. But look, lithium, uranium starting to rally a little bit. We had a bit of a run in uranium yesterday and in lithium as well, PLS and Liontown and Paladin and the like.
And PDN and BOE on the uranium side.
And look, gold and silver were up again. I think what we're sort of starting to see with that slightly slowing consumer, the realization from the US investors and the US is that, like, we're 6 months into this war. We're probably nearly 7 months into this war, and you can't just keep burying your head in the sand. A lot of these tariff inflation that's come through, there's a lot of these are being returned to the companies, but that helps earnings. But it doesn't. They're not passing it on to the consumer. Excuse me. So I sort of think that that REMX or that rare earths and sort of critical minerals ETF that we've been looking at in the States. I think it came about 41% off its highs. And I think it's bounced back, somewhere from the mid 60s to the high 70s. But I mean, we did get up to a high of 112. So we're still probably a good 25 to 30% off the highs. I still think that's really good buying. And that's what we're going in here for with this REMX ETF. Sort of getting around about 4.1 to 4.1 times leverage. Obviously, that's cap downside. This is for 2 years. And, traditionally, we've done these sort of worst of pairs where you are tied to the worst stock in the basket. The reason this one's a touch more expensive is obviously you don't have that complication. So it's just a single ETF leverage. And the leverage doesn't work to the downside, basically. So that first 24% back to those record highs or thereabouts really goes in for repaying the strategy. But then you've got that 2 year run rate where you get that 4-to-1 exposure above that point. So have a look at that mpcinvest.co/critical_minerals, or you can have a look on the front page of the website. Unfortunately, this is S708 only. But if you're already holding this ETF, it's a pretty good capital efficient way to probably play it overall. And go and register for that webinar. It's a pretty it'll be pretty interesting in terms of sort of compared the the internet age to the AI age and that infrastructure build out, etc. And that hopefully we don't have that bubble burst. And I think I think it is different in terms of that regard. But because these companies are super cashed up, whereas they weren't back in those days. But the pace of which this is going as well, those bottlenecks and those spikes in prices on bottlenecks are going to be more and more prevalent than say the internet age and back in 2000, 2001. So but hopefully we get some stability. Like I said, we haven't seen anything from Cochlear as yet. Well, we saw something small. Cochlear was like the profit was down 20%, but I don't know what they were necessarily expecting there. But there'll be some movement in some of those really big names over the coming couple of days, and we haven't really seen too much where we really wanted to sink our teeth in as yet. We've been pretty wait and see, but we'll see what goes on tomorrow in terms of these names. But I don't know. We'll have to. You can grab the calendar to see what's out tomorrow on our website as well. But thanks for listening, everyone, and we'll speak again tomorrow.
Thank you, everyone. Have a great day, and thanks again. Bye.